And if the play is to get a little bit out of the US market, diversify your holdings globally, Bitcoin does well in that environment. So again, if we see a drawdown in US equities, there'll be a gut dip in Bitcoin, but in my opinion, that would be a buy with both hands moment. Welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham Stone, and I am Bitcoin.com's High Priest of the Temple of Hopium. Joining us this week are news and research gigabrain, Mr. David Sensel, and Bitcoin.com growth lead / trench warrior, Sal Salamat. Welcome back, Sal. We'll be getting
Good to be back.
Yes, nice to have you. We'll be getting a view from the trenches this week. Looking forward to that. But first, let's get our market's gut check for the week. So Bitcoin has obviously rallied in the last week or so. The question, I think, is, have we seen the bottom? Obviously, we're still quite far off the all-time high of around 110. Bitcoin saw a pretty massive dump along with US equities. I think the question is, what happens if US equities dump another 10, 20%? I guess maybe the first question, well, will US equities continue to dump? Will we see another leg down in US equities? And if so, will Bitcoin drop with it? Any thoughts, gentlemen?
Yeah, I mean, I think we're probably in a bit of a uptrend at the moment. I think the question everyone's asking is, will this last up to and through the kind of beginning of this tariff, so-called Liberation Day? I think that's what it's going to be called, April 2nd, Liberation Day.
April 2nd, yeah.
Yeah. And so if these reciprocal tariffs start on April 2nd, will that cause another decline in the traditional stock markets in the US? And I think if that happens, if there is a decline there, it will affect crypto.
Yes, so I would agree. I would agree with that in the short term.
Yeah, exactly. but yeah, the short term could be. Let's say the reciprocal tariffs are. I've heard that what the market's pricing in is a 10% tariff.
Yes, that's what I've heard as well.
What if
the market is pricing in at 10% across the board?
What if it's 15? What if it's 20? Right? You could see like a 10% dump, which is what we've experienced now, and that I think would cause Bitcoin to go decently lower. I think there's a good chance it could go into the 70s.
Yeah. So I have a theory on this. All right. So let's say that does happen. That scenario does play out where, the news is worse than expected. Okay. And we get worse tariffs or whatever it is, right? It causes US market equities to dump. My theory is what we're going to see is just a gut reaction dump in Bitcoin and especially crypto. But I think what we're going to see is very quickly a market participants buying that dip on Bitcoin, and that will be the bottom for like, let's call it the next 6 months. And my theory
for
Bitcoin
or for crypto.
For Bitcoin, I'm talking about specifically Bitcoin. Crypto probably not, but Bitcoin, yes. Now my theory here is based on this very interesting discussion I listened to yesterday on the Forward Guidance podcast. He had Felix Jovan the host there had a guest by the name of Shrub, and he's a.
I love Shrub. I followed him for years. He's great.
Yeah, very insightful. He is the founder of a $1 trillion hedge fund, and he's French, but to his credit, he recognizes the issues going on in Europe. Anyway, so this guy's thesis, which I'm kind of leaning towards agreeing to, is all right. The best way to position yourself right now is to have a diversified global portfolio. There's a likelihood that U.S. equities are going to be fine, but they're not going to be. People are overweight U.S. equities, and then you also have things like the movements in Europe with like the defense stocks, like Germany spending a lot of money there and propping up the markets. You got money that has been over invested in the U.S. equities, sort of repatriating. Okay, and then you also have like a lot of risks, global risks. There's people are worried about Le Shrub calls it a getting Gazpromed. You didn't want to be long Gazprom in the lead up to the Ukraine war, and right, obviously that was a unlucky for those people and those types of risks. So if you're invested too much in China, right, you could get Gazprom. You could get like screwed by some geopolitical shift. Okay, so anyway, his thesis is, or his play, it seems, is diversify globally. So his portfolio is the most diversified globally that it has been in quite some time. And to me, I think this is a good setup for Bitcoin. It's bullish Bitcoin, right? Bitcoin is not a US equity. It's a global asset. And if the play is to get a little bit out of the US market, diversify your holdings globally, Bitcoin does well in that environment. So if we see a drawdown in US equities, there'll be a gut dip in Bitcoin, but in my opinion, that would be a buy with both hands moment.
Yeah, I mean, I agree overall with that. I don't know if I would be like, I'm not very much in equity markets anyway. I don't know if I would be diversifying into other equity markets personally. But again, I have an American bias, I guess. But I do think that no matter what happens, it'll be good for Bitcoin. As you mentioned, right now it looks like the U.S., at least for the time being, is all about like what's it called? Reducing the deficit, saving money, not printing money. Whereas around the world, they're starting to kind of cut loose. Like you mentioned, Germany, they just started deficit spending for the first time in, I think, 4 years, basically since COVID. So that's a big signal. So they're going to be spending. They're going to be doing deficit spending. China has indicated that they're going to be doing it as well. And so that kind of money printing will most likely find, at least some of it will find its way into Bitcoin, right? So
yeah,
even though the US isn't going to be participating in that quite yet, which also means that you might be right that the US equity markets aren't going to be juiced by this, you can still capture a lot of that global liquidity entering the system via Bitcoin.
Yeah. Sal, curious to get your gut take on where we are at right now in the markets.
I'm going to approach this from the perspective of Bitcoin being fairly resilient despite all the talks of tariffs. And secondly, it's really interesting what you brought up, Graham, about diversifying globally, because even among popular altcoins, I'm getting the sensing that depending on the market that you're observing and the people that you speak to, people are just geographically, I'm going to call it geographically bullish on their own picks. Take, for example, you mentioned the Ukraine war and being bullish on Gazprom as an example. So Ton's not as popular, I would say, in Europe, parts of Europe, due to its association to Pavel Durov and Telegram. But I think the further you go east, that attitude tends to change.
Okay.
So yeah, just an example of, diversifying globally, but also within the crypto market.
Okay, interesting.
Here's the other thing about this, though.
So hold on a sec. Let me just double click there.
Major click.
So, Sal, are you saying that crypto projects that are sort of not based in the U.S., so like for example, Ton, I'm not sure if that's actually the case with Ton, but those ones might do better in this environment as opposed to the ones that are based in the US, like let's call it, I don't know, Solana?
I would say, well, the reason why I brought up Ton is a bit of a special case because of the Russia-Ukraine war. Telegram and Pavel Durov being investigated for activities on Telegram, that affects Ton price, as people have seen from Pavel Durov's arrest in France. I haven't really come across other altcoins that face the same type of political pressure on the coin's performance. But it's interesting to see that, for example, in conferences that we are about to attend in Asia, I think Ton is actively sponsoring them, whereas they don't really seem to have much of a presence or following, the further west we go. So, I might be zooming into Ton specifically, but I just think that of all the altcoin narratives at the moment, this one's fairly interesting because we talk about decentralization a lot. We talk about financial liberty quite a fair bit. But it's interesting to see that different markets have their preferences, whether politically or for the lulls, as with memes.
Okay. Yeah, interesting.
That's a good point. That's a good point. I mean, I was just looking at the Ton chart, and it's kind of rallied off of the March low pretty decently. And you could imagine if the U.S. Sorry, if the U.S. and Europe, but specifically the U.S., are able to kind of force some kind of peace treaty or whatever for the Russia-Ukraine situation, then presumably Ton would see a decent spike off of that. Maybe, yeah.
It's a fair assessment to make.
Interesting. So possibly some altcoins out here that are influenced by geopolitical factors, not just Bitcoin.
Yeah. I would say in general, though, the thing that I've kind of come to appreciate very late, I should say, by the way, is that it does seem like this cycle, I could be wrong from this moving forward, but it's just been Bitcoin dominated, and nothing else has really touched it. Whereas all the other cycles, alts had their big moments to shine. And we've had like little mini alt cycles, with the Dino coins, XRP and Cardano and a couple of the others. But I don't know, it didn't really feel like the previous cycles where you would just see these like massive runs on all the alts over the course of 6 to 8 weeks, And I'm getting the feeling that maybe this time it is different, and that it will be kind of Bitcoin not only, but mostly, 80% Bitcoin, and all the entire space will have to kind of get the scraps from that. I don't know if you guys have that feeling or not, but I've kind of come to feel that.
That's my intuition as well, which scares me because I tend to, anytime like that seems to be the consensus view as well, which, as we all know, doesn't usually bode well for your holdings when you have the consensus view.
Well, I mean, it just means in this case, you're not going to. So, like, the whole reason that you go into non-Bitcoin coins is that you want to do better than Bitcoin in terms of terms of returns. So, even if you were just to hold Bitcoin, you're not going to lose money. You might not gain as much, but yeah.
Okay, well, so I think this is actually quite a good transition to talk about this growing trend of companies buying Bitcoin, publicly traded companies putting Bitcoin on their treasuries, on their balance sheet. Now, when Saylor first started snapping up BTC via MicroStrategy, which is really annoyingly now called Strategy, it obviously led to a big pump in the price of MicroStrategy, the stock. And people speculated that this would be the beginning of a new playbook for companies. And we're actually seeing that happening, right? So the number two behind MicroStrategy, the next big company to employ this strategy was MetaPlanet. And this was a kind of a dead stock. It was a Japanese hotel developer that bought its first Bitcoin less than a year ago, April 8th, 2024. And since it started doing that, since it started buying Bitcoin, putting it on its treasury, the price of the stock has 23x'd, up 2,300%. And they just announced their latest purchase earlier in the week. So they now hold, the latest purchase is 150 BTC, meaning they now have 3,350 BTC. And the CEO, David, thanks for prepping this for me. We have a quote from the CEO posted in Japanese on X, translated to English as, "Today, the company recorded a record high trading value of 50.4 billion yen. It is ranked 13th in terms of trading value in Japan, surpassing Toyota, which has the highest market capitalization of a publicly traded company in Japan." So, thoughts here to start this off?
Yeah, can I just I was just going to say one thing. Like, I live in Japan. I mean, Graham, you're in Japan too, and it was crazy to see. Allegedly, yeah, supposedly, and it was crazy to see their what's it called? They had a shareholders meeting. I don't know if you guys saw those photos being circulated online, but it was like standing room only, basically. Like every seat was filled, and there were people on the sides for this meeting. It was crazy. I wasn't there at the actual meeting, but I saw pictures of it live online. I was like, good Lord, for a shareholders meeting, that's pretty intense. And so, Saylor doing it, and then everybody seeing that this can work. But then there's questions like, oh yeah, Saylor's a very charismatic, crazy person. Can this be successfully replicated? And I remember last year when MetaPlanet first started this, right? And yeah, people were like, "Wow, this is ridiculous. This is like a little crappy Japanese company." And then now, less than a year later, they're filling a giant hotel conference room to hear their shareholder meeting. It's pretty wild, and that's gonna really. Go ahead.
People really like this idea. And by the way, I'm not sure if you know this, but MetaPlanet, this whole idea that of tapping the Japanese public equity markets, like the capital that's available in there, in the way that MicroStrategy did it, to do that in Japan, this was spearheaded by David Bailey from Bitcoin Bitcoin.org, I want to say.
Bitcoin
Or is it
Incorporated.
Bitcoin Inc., right? Yeah. Now, he is replicating this in capital markets around the world. So Japan was the first one, I believe, that they initiated this tactic. They're expanding it to all major capital markets, India, Hong Kong, I don't know where else, probably Singapore. And yeah, the idea is, right, there's this capital that can't be invested elsewhere. Oh, I mean, like it's tied up in equities, right? Like, or certain TradFi instruments like that. And that capital wouldn't otherwise be able to get exposure to Bitcoin. When you make this available to it, it makes it possible for that capital to flow into Bitcoin. And that's why these companies have done so well.
It also allows you, like, one thing that a lot of people struggle with is, why not just get into an ETF or something like this? This allows you to, the way that they're structuring this is, it allows them to raise money, essentially take loans or create leverage in a very, very safe manner. And so it's there is some value of it over just going into an ETF, because you're able to kind of embed this leverage within a corporate structure, which is then has all these protections via the law and things like that. Now, eventually, when you get to sailor size, that premium starts to shrink, of course, because the size relative to their holdings becomes vastly more important than the amount of further loans that they can take out. And so you're seeing this with Sailor, and presumably in the future that premium is going to get compressed and compressed and compressed. But you start with a smaller company like MetaPlanet, and then the premium can be much larger. And then as their Bitcoin holdings grow, it'll the same thing will happen. And so it seems like a reasonably successful thing to do, to get some kind of embedded leverage in Bitcoin exposure.
And adding to it, the latest news here is that GameStop is raising 1.3 billion to basically do the same strategy as Strategy. So the prophecy, the GameStop prophecy, seems to have come true. I know that people in the GameStop community, not just the ones who like the stock, but anyone speculating around it, have long talked about GameStop deploying the strategy, the Bitcoin corporate treasury strategy. And it does seem to be happening now. They've raised 1.3 billion. So the trend continues.
And you would presumably it's going to accelerate, right?
Yeah. I mean, Rumble announced earlier in the month, same strategy. And then we have another one. French Bitcoin treasury leader snaps up 580 BTC. So this company is called the Blockchain Group. Now, is there a risk that this all unwinds in a very unpleasant way?
I like what David brought up about how if you're taking a corporate investment, then there are protections in place. So I might be taking a very simplistic view on it, but the word that comes to mind is insurance. It's an insured investment. But on the narrative of Michael Saylor exposing strategy to more risk via how much he's deployed into Bitcoin, is it just safe to say that the more of these smaller companies following suit, the safer Saylor's investment is? Will he look at that as exit liquidity in any way?
No, I don't think so. And I think the way that these things are structured is he at least for Sailor, I can't speak to any of the other companies doing this, like MetaPlanet. But I know the way that Saylor has structured this, it behooves him not to sell, right? So he does seem like a true believer, and the incentives for the way that he's kind of issuing debt means that he doesn't have to sell Bitcoin, and he shouldn't. And I imagine that all these other companies are kind of following the same playbook. So it's pretty interesting in that regard.
And so just end of the day, this all seems very bullish for Bitcoin.
Yep, I agree. I mean, the real interesting time will be, let's say we go into a bear cycle. All right, we'll eventually get there somehow, somewhere. And does the price run up enough that then when the price goes down, all of these structured deals are still safe? I imagine so that'll be kind of an interesting moment, I think. But again, TradFi, there is obviously speculation and volatility, but it's just way less than what crypto experiences. So you just have to think that a lot of that volatility, you'll have the price go down, but it won't be as much as in the past. And I mean, at least that's what I would think.
Maybe we should pivot to this other story, which was published just a few hours ago by Jamie Redman, in which we're discussing the 4-year cycle. So I've got this chart here, which shows the Bitcoin price over the previous 3 cycles, and then in the black we have the Bitcoin cycle, or the price for this halving cycle, and this is posted by Miles Deutster, and he says, looks like the 4-year BTC cycle is dead. We're starting to see significant deviation from the norm, new paradigm. Now, the reason I think this is relevant to what you just said, David, is that basically you're saying there's because of all the TradFi instruments now in place, the volatility of previous cycles, the propensity to follow along the 4-year halving cycle, that might be broken or at least muted.
Yeah, I mean, I think though that we should probably see some pretty decent upside still. That we did get some, we did get upside off of the lows from the previous cycle low, but
Yes.
as this graph indicates, we really haven't kind of had that parabolic movement up yet. I don't know. I still think it should happen. Maybe, obviously less parabolic. I think every cycle, you get less of a parabolic move up, but it should still kind of have that move up, and we haven't had that yet. So I think we should probably have some run up, some kind of crazy run up, but then less than before, but then also the downside will be less than before. So I don't know. I still think that's going to happen. I don't know about you guys. What do you guys think?
Yeah, I mean, just looking at this chart, I could see it happening. It doesn't look like it's out of the question.
I mean, charts are open to interpretation. I'll just caveat that, but just looking at what's on screen at the moment, it's not that you can't visualize it, because it just seems like that low that it's in is kind of trading a bit sideways for an extended period before a catalyst.
Exactly.
Oh yeah, this graph or this chart.
Yeah. All right, just looking at a few more other bullish Bitcoin points. Well, one mainly is that a couple actually. Well, let's talk about the ETFs. Okay, so there's a new That's awesome. All right, so a new survey has come out in the U.S.
Gigagram,
which says that 76% of U.S. investors are planning to boost their crypto ETF holdings this year. And just looking at the ETF flows, here's from CoinGlass. So we had some pretty massive outflows earlier in the month, in February and into March. But for the last week, 10 days, we've seen steady inflows again. I mean, this corresponds with the recent bounce in Bitcoin. But this is an interesting data point, right? More people are saying they're going to add to their crypto, Bitcoin and crypto ETFs.
It also makes sense from a U.S. perspective, just because politically speaking, crypto is really being normalized, and like we were talked about before, companies are coming back to the U.S. Businesses will be more comfortable getting into this. You're going to see all these institutions talking about it a lot.
Yeah.
Like last week, we talked about, what was it? Was it Templeton? Was it Frederick Templeton? I forgot the name of it. Right, they're tokenizing. BlackRock obviously is up there talking, singing its praises. So people are just going to become more and more familiar with it, and it makes sense that they're going to just allocate a little more into it, more and more over time.
I think if you look historically at ETFs, the first year that an ETF is launched is pretty much always the least in terms of inflows. So the inflows ramp up gradually with ETFs. Now, Bitcoin, crypto, maybe it's an exception, but it takes time for all these institutions to roll out their marketing, to convince their clients, and then when they start off with a 1 to 3% allocation, they move it up to 2 to 4, 5. Right, the flows gradually increase over time, and that was the case with the gold ETF.
Yeah. Also, like all the RAs, the what's it called, the registered advisors, they usually don't step in right away either. They want to see, that this thing is kind of safe, and so they really haven't started to push. This year is probably when they would start doing it. They haven't really started to push Bitcoin to the people that they're advising. So that would be also a massive uptick. But yeah, it's probably just going to be one of those, at least for Bitcoin, those kind of grind higher kind of things. It'll just grind higher for a while.
Yeah. All right, so things looking good in Bitcoin land. Anything else to add before we move on to?
Yeah, I don't have enough Bitcoin. World? I've been hosed. I've been hosed. I was in other things. ETH absolutely killed me. I hate ETH now. Hate you, ETH.
Oh, I'd still hold. I hope you haven't sold.
I sold with disgust, and I wish I could have just I wish I could have, more than press the sell button, like maybe just punch it or something like that. It was absolutely awful.
I hope that gave you closure and that you do not look back in anger.
It didn't. No. Still angry.
Oh no.
Yeah, well, I'm hearing more and more inklings of ETH bullishness from, especially from the institutional corners. They're saying, like BlackRock's building on ETH, whatever. Like
Franklin Templeton is tokenizing on ETH, blah, blah, blah.
Yeah.
I don't know.
We've talked about it ad nauseum
for like a year, you know, and not just us, like the Steady Lads podcast, which I highly recommend. I've been listening to that for years, and that's been like more than a year of them being like, is ETH at the bottom? Right? Like, I mean, just absolute devastation.
Yeah. All right. Well, let's move on to other dumpster fires. The hyperliquid situation.
This is not a dumpster fire. This is not a dumpster fire.
It's not a dumpster fire. Okay.
No.
Wait a minute. Just full disclosure before you line this one up for us, David.
I have a lot of hype. I have a lot of hype.
So David is a hype bag holder.
I am.
Tell us what happened with the hype situation.
But it's actually
dug into it.
Yeah, it's quite interesting. And I learned a lot of things about crypto that I didn't know before, which is pretty cool. Anyway, the overview is hyperliquid. It says it's a decentralized exchange. This story kind of reveals that that's maybe not quite the case exactly. But they delisted this Solana shitcoin Jelly, the Jelly token, after detecting suspected market manipulation, pretty much guaranteed at this point. All right, so let's see if we can walk through this. What happened basically. Now, a lot of this is not fact, right? It's just pieces coming together from different parties on crypto Twitter. But basically, most likely you have a scenario where it started with a whale accumulating a significant amount of jelly, maybe I've seen online on crypto Twitter for more than a month. And I've heard that they accumulated upwards of 40% of the supply, right? It's a kind of an illiquid coin, low market cap coin. Then this week on Hyperliquid, presumably the same entity that was accumulating all this started a massive short position on Jelly. I think they did it on the max leverage available for that market, right? At the same time as they opened up this insanely large short position on leverage, they started to buy more jelly. Now they already own a big part of the supply, so they started buying more jelly, and basically this would cause the price to go up much faster than if they owned less of the supply, right? Because they're not going to be dumping. All right, so this causes the price to go up, and then because they're on max leverage on Hyperliquid, the position is like instantly liquidated. Okay, that means that Hyperliquid, the protocol, takes on that position, right? So they have to take on that position, and they have to kind of settle the position, right? Figure out what to do with this large position on a highly liquid market like Bitcoin or Ethereum. It's pretty easy, right? They can buy back the Bitcoin or Ethereum. It's not going to make the price move that much. But on an illiquid shitcoin where one whale owns a lot of the supply, if they have to buy back Jelly, for example, then it would cause the price to go up a crazy amount, which then makes it harder for them to buy more, and you get this kind of reflexive thing where they suddenly are losing a lot of money. The protocol is losing a lot of money. Now, so Hyperliquid is just holding this short position, and they're trying to figure out what to do with it, right? Whether at the same time, the entity on chain is still buying Jelly, right? So the price is still rising. So the short position is getting worse while this is happening. Then major centralized exchanges get involved, specifically Binance and I think it's OKX. I think those two. And they make announcements that they're going to list Jelly suddenly. Oh, we're going to list Jelly. You can get access to Jelly. I think spot and maybe futures. I can't remember exactly. But again, this seems to me to indicate, and others online, that they're like trying to like what's it called, hit somebody when they're down, right? Like this is their competitor and they're just all over it. And so they list Jelly Jelly. Again, price is going up even more. And their losses are growing higher and higher. Very, very large at this point. I think the largest it got, the estimate was something like 240 million in losses, something like that, and growing. So the hyperliquid leadership got the hyperliquid validators in a room or in a chat to vote on a course of action. And the course of action was a kind of a centralized action, right? To basically stop this exploiter and revert the market. The validators voted, and a quorum was reached in 2 minutes, right? And so then they got the consensus to do what they did, which was they delisted this Jelly market, and they removed the market from the platform, and then in the process of doing that, they settled all the positions. For example, this massive short. But what the quorum was really for, the vote was really for, was to decide at what price they were going to settle out all these positions. Now, I think it was at the time that they delisted it, Jelly was at like 50 cents, right? And like climbing probably. And they did it like 70-80% lower at 0.0095 cents. It's just massive thing, difference. And a lot of people were surprised that Hyperliquid had centralized control over their oracle, right? So they have direct control over the oracle, which determines the price of different what's it called, tokens on their platform. Anyway, they did that. The exploiter lost some money instead of gaining any, and then the customers, the legitimate customers, who lost money during this, were paid out by Hyperliquid, and that's kind of encapsulates everything that happened. Okay, now all during this time, though, you have some interesting things, like people online talking about how, oh, this is ridiculous, Hyperliquid's not decentralized, right? They're a centralized entity. The funny thing is, you have people like Zach XBT saying things like this, which is fine, perfectly fine. But then you have CZ retweeting this. Again, it just seems really like they're attacking a competitor when they're down. You have OKX, some OKX CEO or something like that, getting on Twitter talking about how bad Hyperliquid it is for doing this centralized tactic when they claim to be decentralized. So again, very, very much in line with this idea that they're not, they're kind of exploiting this, not exploiting the situation, but again, taking the opportunity to hit a competitor. I agree with the people like Arthur Hayes and Suzu. So I don't know if you could bring this up, but Arthur Hayes had this comment. He had several comments on this, but the initial one was basically like all the people complaining that Hyperliquid is centralized, or complaining that Hyperliquid is not decentralized, are kind of stupid. Nobody thought that was that important. And then this morning he had this tweet here, which I thought was, again, to me, really kind of how it feels, right? Some of you will appreciate the irony that CZ and Star are cooperating to gang up on Hyperliquid. You got to know your crypto history to get the joke. There's nothing more that humans like than to support an underdog versus a perceived unstoppable opponent. Hype for the win. Yeah, so again, just this idea of when your opponent's in the lurch, that's when you hit them as hard as you can. And then shout out to Suzu. I was in a spaces of his yesterday or the day before, and he was talking about this whole hyperliquid situation. And I learned a lot of cool things from him. First of all, by the way, he thinks that hyperliquid did the right thing. He thinks that, like Arthur Hayes, the decentralization aspect of this criticism is a fair criticism, but it kind of misses the point. You got to do right by your customers. You got to defend your product, and then later down the line, you can decentralize slowly once you kind of work out everything out. Just like the Ethereum DAO hack, right? Like this kind of thing. And so he is a part of what was it? Ox.fun, which is a centralized exchange. And he said in these spaces, if I'm remembering correctly, that Ox.fun has been around for approximately 1 year, and they have had hundreds of these kind of attacks where traders get on the exchange, they get familiar with their like liquidation engine and how the different markets work, and they try to exploit it to their gain all the time. He says it's just dead standard. And it's kind of inevitable. You can't really fix it. It's just a byproduct of having of a market, and there's always going to be kind of like little inefficiencies in this kind of thing. Now, he said because centralized exchanges are black boxes, none of these things are ever public. And so what Hyperliquid did, for example, changing the Oracle price of the asset, that's a reasonably common tactic to do when you see an exploiter do some bad stuff on your exchange. But nobody knows, and so there's no outrage, right? Because you can't see it. Now, I don't know if you guys remember this, but Ox.fun had an exploit attack that went public last month. I don't know if you remember this. And the only reason that it became a big kind of kerfuffle online is the fucking exploiter went out and said, Ox.fun stole my money. They're terrible. Da, 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 da. And so that the exploiter made it public, right? And then Ox.fun got a lot of flack, and people were like, Suzu, lying and stealing again. But then third parties stepped in and like talked to Suzu, and they came out and said, Suze shared some of the details on the exchange side, talked about how the exploit was done and walked me through it. This one guy in particular was like, I've never liked Suzu, but just seeing how the exploit was done, yeah, this was an exploit. Yeah, it was shitty, and I think Ox.fun was right. Now, here's the funny thing is, because of all the backlash that Suzu and Ox.fun got for this, they gave the money back to that guy, to the exploiter. Whereas in the spaces, Sue was like, yeah, seeing what Hyperliquid did and seeing how they priced the Oracle at a certain amount, he said, we should have just kept the money and told that guy to go F himself in the, because yeah, it's a bad thing. So anyway, I've been talking for a long time. You guys can ask me questions about this. The point, though, is that it's really, really common, and I'm sure Binance and OKX, they have to deal with this stuff probably all the time, right? Getting poked and prodded by people trying to exploit their system.
Yeah. So I think the question is like, with these decentralized exchange systems, derivatives trading in the decentralized environment, I guess that's how you could describe Hyperliquid. How important, does this matter?
Does the decentralization part matter? Is that?
Yeah, I guess. Yeah.
Yeah. So there's two. I mean, this is a really interesting question, and it's really interesting for a number of reasons, because the first is you have like the crypto ethos of decentralization, right? And kind of uncensorable money and this kind of thing like that. Like that. So that's one issue. Then on the other side you have things like, well, why did Ethereum roll back the chain for the DAO hack at that time, right? That's ostensibly a decentralized system, right? Now, the community basically decided to roll back that. It wasn't, you could say that it was like a one central entity that decided to do that, but the community forked after that, right? You have ETC, they went their one way, and then you have the people who like for the Ethereum Foundation basically, and Vitalik, who went another way. Isn't that kind of a form of decentralization? Kind of, right? Like you could have gone this way, you could have gone that way. Now, in the long run, it's been clear that for Ethereum, and then there's other various hacks where this has happened. The right way was to protect people's money who use the thing, right? In the long run, that was the right thing to do. Is for a small, burgeoning project, you protect the people using the system, and so
that's
I think
what Hyperliquid has done here.
Yeah, and so basically, for people with money who trade on the platform, market makers, the whales, they'll be relieved by this, not dissuaded, right? Because they'll be like, oh, if my money gets messed up in the future, they're probably going to do right by me. Right? And that's going to give them.
Hyperliquid is willing to step in and bend the rules, but they are a benevolent dictator
For now, right? And maybe forever. I remember, Jordi Alexander from Study Lads. He was on a podcast, the Gort Show, which also is really, really good. And he was talking about Hyperliquid for a long time. And he was saying that the thing that makes Hyperliquid special, and that made DYDX special, which is DYDX, he, in his opinion, is no longer special, and I would kind of agree, is that you basically have, it's like a compromise, right? You have a spectrum of decentralization, but then on the other side, you have a spectrum of like performance. And for for trading and for derivatives and perpetuals, this kind of thing, you can't really sacrifice too much performance. In essence, performance is more important than decentralization. This is why Binance and like Bybit and these platforms are still way more popular for this kind of thing, because that performance is really, really, really important. And so Hyperliquid probably is going to, I think, clearly now. I don't know what their marketing thing and whatever is, but they're probably, I think, in the case where they're on this spectrum, they're going to be like, yeah, we're not 100% decentralized, but also we are performant, and we are much more transparent than Binance or OKX, which are just complete black boxes, right?
Yeah, that's actually the other point that seems interesting to me here, right? Like, we can see the public can see what happened, and they can judge for themselves whether this exploiter is being screwed by the protocol or was trying to screw the protocol, right? Now, in the centralized exchange analog to that, you just have to take the exchange's word. You have to take the exchange at its word that it was doing the right thing. And so, like, as the example you described with OKX, right? The exploiter was like making noise, like, oh, the exchange screwed me. And that can get traction because nobody knows what actually happened.
Exactly.
But here, this exploiter in the Hyperliquid exploiter, they can't really claim innocence because everyone can see that they were being like, okay, technically there's nothing stopping them from doing this. It's like allowed, I guess, but they were going against the spirit of what this protocol is, and so that the community can judge them on that, and Hyperliquid is a winner in the end. So it's a buy here. Bullish Hyperliquid.
I'm biased, but to me, even setting aside my bag bias, I think it's really fascinating. I didn't fully appreciate this kind of cat and mouse game that exchanges play every day with with their users, which is the users are there to not all the users, but some of the users are there to exploit just the fact that there's a market, right? So how, like, here's a question that it raises for me. You know, taking for granted that this is just a part of an exchange with like an order book and like spot and derivatives. How decentralized can these exchanges really get? Because if these attacks are just happening all the time, hundreds of times, OKX said like hundreds of times in 1 year. Probably Binance, they probably have to deal with this every day, right? Like, and you need to have like such fast reaction time, and like you have to have like dictatorial power to just. I imagine like at OKX and like OKX, they just closed out the guy and took his money, right? Now they gave it back because there was backlash, but they didn't. There was no like
Oxdot
public
fund,
Oxdot fund, and you know Binance, and I'm sure they all do this too. They're like, oh, we see this guy in the order books doing some shenanigans, cut him off, zero out the position, you get nothing, you know, and they never complain, right? Because they know they're up to no good. This guy did, but so then if you have like a truly decentralized performant order book exchange, I don't know how decentralized can that actually be without getting your ass handed to you, right, and just losing all your money.
So what is Hype's main USP then? It's simply that you can do this, you can create an account without KYC?
Right now, yeah. Right now it's that you can create an account without KYC. You can what's it called? You can for people who are much
get
smarter
access
than me.
to markets faster.
You can get access to market faster. There's a lot more transparency. You can see everything on. You can see it, right? You can see the liquidation engine. You can see how the inner workings work, apparently. But I think the biggest thing for me is, unlike OKX or Binance or Bybit, you get basically direct equity, right? Hype is the protocol. Now, for Binance, you can get like second order access via BNB, but still that's not like getting equity, like basically equity like exposure to the exchange itself, you know?
Yeah. All right. Anything to add to this, Sal? Any thoughts from you?
Yeah. No, I was just mulling over what you guys shared regarding the decision to prioritize the public's money or the user's money, and I just wondered how much of their pending season 2 airdrop had to do with that decision.
I think probably almost none. I think this was more like it wasn't existential, but it was a significant amount of money. Like it could have I think it could have wiped out the whole liquidity pool for that portion of the thing. I mean, you know, 270 million base, probably higher than that. That's real money right there. Also, it would have rocked confidence with people with money in the exchange. But also, Suzu raised this, which I think is really, really, really important, which is, and this is, and Suzu was like congratulating Jeff for doing this, which is the exploiter had many opportunities to like close his position and get money, right? But he thought he thought Hyperliquid was going to go a certain way, which is they were going to eat it. They were going to stick with this 100% decentralization thing. And so this greedy bastard kept his positions open. And then so he lost money. The exploiter lost money. And so this sends a message. Let's say Hyperliquid stuck to the decentralization thing. They ate that giant cost. Man, it's open season on the protocol now by every exploiter, right? To go in there and find a nook, and if you find it, Hyperliquid is not gonna roll back. They're gonna eat the cost. You can't do that. You can't do that.
Okay, so
right?
Hyperliquid made the right decision here for sure. In the way they reacted to this. All right. Let's dump into let's dive into the trenches here.
Trenches are back.
Freudian slip, Miriam.
Baby.
Freudian slip.
Trenches are back.
Freudian slip about the meme coins. Let's dump into the trenches.
Let's dive into the trenches.
Trenches are dumping on me this week.
As our resident trench warrior, could you give us an update?
Sure.
I've seen some green shoots. Seen a few green shoots.
Have you? Okay. I'm actually looking at one really green shoot right now called Ghibli. So,
okay.
Just the TLDR of why I think trenches are back. And I tried to go at it from fundamentals, just adopting a Murat thesis and looking at cult classics, as Murat calls them, with coins like Bonk, Popcat, Whiff. These coins, if you look at the all-time chart, they seem to have rounded off from a bottom. So, if that makes sense at all, and if you could use that as a thesis, it kind of looks like, people are not abandoning meme coins and trying to go back to something a lot more stable. There's resilience in the meme coin market. Retail heavy chains like Solana and Base are still seeing plenty of activity. And Ghibli, which is what we're seeing on screen right now, is a classic example of how a little bit of social media, AI magic, and degenerate activity can still bring you from rags to riches within, 2 days?
Yeah. So just to recap the Ghibli situation, for some reason, which I'm not entirely clear on why, maybe David can illuminate there, but there are Ghibli-themed images and videos.
It's Ghibli, by the way.
Ghibli? I stand corrected.
Yeah.
Sorry.
Ghibli.
Japanese
company.
Japanese company,
Ghibli.
I've seen that. Yeah, I should know that. Sorry about that. Ghibli themed, ChatGPT generated Ghibli themed images and videos have taken over the internet. I saw a JD Vance one, which was funny, and a few others. And I don't know why this happened, but suddenly it's all over the place, right? And then Sal, as you're pointing out here, and as we've seen with like meme coins over the last 6 months to a year, anytime something gets traction in the mainstream, there's a meme coin for it, and that meme coin runs. And, that has not ended. It's happening right now with Ghibli.
I don't know if that's a cycle. As far as anyone watching who's interested in getting their feet wet with meme coins, what we're looking at is a meta that's formed. With Ghibli, I think there are plenty of derivatives that are launching off of platforms like Pump.fun. I'm not going to go into specifics, but people find a way to, I'll call it cross-pollinate memes. So they take Ghibli and they take a classic meme like Pepe, and they might try to generate a Pepe Ghibli and launch a coin. You'll see that run for a bit, but don't count on it being the ticket to paying for your kids' university.
Yeah, and with this Ghibli meme coin, like how big is it going to get, and how long can it last? Like, surely not.
That's a good question.
Months.
I'm no expert.
Weeks, days.
into the weekend, Max.
Right, so it's you got to be on it. You got to be on it with these, right?
I think we've
but it's
missed
still
the pump.
the point is, it still exists, right? That like there's a meta forms.
It's still fresh.
A coin happens, and a coin is launched, and if you're onto it, if you're plugged into the zeitgeist, you could profit, but you better begin out fast.
Yeah, and that timeline is getting shorter and shorter. I think.
Go ahead. Continue.
I'd say maybe 6 months ago, people would approach this with a bit of a routine. And in Telegram chat groups, people would say to each other, hey, you've missed the initial run-up. You've missed the pump, but don't worry. When the US market goes to sleep and when the degens are, just taking profit, you'll see a dip. So buy in during that dip because you might expect a second wave up. I just don't know if those fundamentals apply today, but I'm looking at the Ghibli chart and I'm thinking to myself, I wouldn't be surprised if this dips tonight in Asia. And as the US goes into the weekend, we see a second run up or even a new all-time high.
Really? I personally think meme coins are reaching like 1 billion market cap in like a day or two. I think that's kind of done for a while, right? Like these are in the context of like where meme coins were 6 months ago, especially 2 months ago, or 3 months ago with the Trump coin. It's just like a shadow of its former craziness. I mean, obviously it'll always have a place, but I would say expect lower market cap all-time highs. But maybe I'm wrong with that. I just feel like there's still a lot of exhaustion.
I would tend to agree with you. I think I'm trying to be logical about this, but the meme coin markets are hardly logical. It's very relative to what's happening to the macro conditions of the crypto market. So if there's bearish sentiment on BTC, touch wood, people are probably going to think that it's probably not the best time to be gambling on meme coins at the moment. But if we do see that catalyst to find BTC returning to an expected, God candle pump, then you can bet that people will be cycling profits into lower cap opportunities like altcoins and meme coins. And I just want to go back to Ghibli real quick and say I'm just happy to see Ghibli pump, not because I've got bags in it, but because it's a classic example of an organic meme. Where did it come from? Someone just used AI, came up with a theme, and it went viral.
Yep. I mean, yeah, that kind of encapsulates it completely. I do think it probably has run its course in terms of its meme, like the image meme potential. Probably into this weekend we're going to be exhausted with seeing everything Ghiblified, as it's being called often now.
It's going to fade fast, and so will the associated meme coins.
Yeah,
they will not be long lasting.
I don't think so.
Looking for entry at 20 million. Just joking.
That's funny.
All right. Does anyone have any Ghiblified things that they'd like to share while we wrap this up?
There was the one. Was his? Let's see if I can find it. His name is Zeneca. He had like a 9 million viewed post. It's one of the early ones.
I like. While you're bringing that up, oh, what happened here? Oh, let me stop that. Wrong share.
All right, dude. I threw it in the bottom of the show and tell.
Okay, let me bring up the other one here. Okay, so the White House issued one.
I know, it's crazy, right?
And this was a reply to the White House's one. Just in the replies. I really like this.
That's awesome.
Yeah. The White House one was it's in here somewhere.
It was a little. I didn't understand it right away, to be honest.
I can't find it.
Man, they've got like a zoomer.
Oh, there it is.
Running
There you
there.
go.
Yeah. So based on a real story of this this illegal immigrant who was arrested, some connection to being a fentanyl dealer, and then the White House giblified her. And that's where I found this
Reply.
Yeah. That was funny. All right, let's bring up yours.
I put it in the show and tell.
All right.
What's up with your internet?
What's going on with my internet's? I'm going to
It's
blame X for
qualifying.
this one.
It's it could
I
be.
think Elon's getting DDoSed again.
I've noticed that happening a lot more these days.
Yeah. I don't know. It's not coming up for me. Oh,
Oh,
I got it on another screen. Got it on another
nice.
screen. Here we go.
This is just
Oh yeah,
one of the early ones. So he giblified 4 classic memes.
Yeah, I chuckled when I saw that. Yeah.
Turkish shooter.
What's this one?
A house
The
on
little
fire,
girl
but it's okay.
No, it's like she burned it. I think she looks like she started the fire, right?
I recognize the meme though. That was an OG
This is a
meme
great
where
one.
the format was there's a header and a bottom subtext.
Yeah. So classic memes, giblified, and this is like one of the first ones around. So
Yeah.
had that mystique, I guess.
Okay.
Yep.
Good stuff. All right, should we wrap it up here, gentlemen?
Let's do it.
Good
Yeah.
podcast.
Okay. Yeah. Thanks. Good work, everyone. Thanks for joining. See you next week.
Ghibli 1 billion.
Bitcoin.com. Let's do it.